Hi everyone, welcome to Admiral Markets webinar. Thanks for joining us today. Looking forward to take a look at the markets with you, Forex, commodities, stock indices, and we'll take a look at technical analysis, of course. First though, be aware that this webinar is shown to a live global audience. Please be aware that it may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar and later on video, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty. So just want a quick sound check because I am using a different USB portal. Just want to see if the sound is working fine. All right, perfect. Thank you so much. So regarding the calendar, as always, please take a look. You can check that out at admiralmarkets.com. Go to education, go to Forex, analytics, excuse me, then click on Forex calendar here, and you'll see the news events of the day and the week. Always be aware of that, of course. This week, nothing major, but always there's something, of course, of interest, some kind of GDP number or unemployment number that is a bit interesting, of course, to keep an eye on. So you will see the importance tagged in green, yellow, and red being the most important. All right, so that's something to consider. Also, what you can do is take a look at the market heat map, market sentiment, take a look at our articles, analysis, of course. I won't dive into all of that to save some time, but one of the things I like to look at is the heat map, for instance. And you can see what kind of movement typically is available on the financial markets, and you can see that typically the pound is a big mover. Yesterday was a Monday. That's more slower day on average, but you can see here the pound, despite that, always kind of doing its best to show a lot of volatility and direction, and that the least was the Swiss franc. That's not surprising. So nothing new there, but always interesting to take a look. All right, let's take a look at the charts. And today, as we've been doing for the last few weeks now in March, we're taking a look at intraday trading, or trying to at least, but from my perspective, it's not been as easy. I would say March for my type of trading has not been really very, I didn't like the movement so far. It's been quite choppy and relatively corrective. Of course, there's been some good moves, don't get me wrong. For instance, looking at this pound odd, the upside was quite nice. Second part of March, but they've been before the first part of March was quite choppy, and the dollar itself has been quite, I think, quite yucky. Let's say. I don't know if that's the right word, technical word for it, but I think you get my point. So from that perspective, not a lot of strong directional movement in general. Primarily because of the dollar, I guess. I do look at a lot of dollar pairs in this webinar with some major crosses, of course. One of the crosses that I wanted to start off with actually is AUD New Zealand. And we'll dive into don't get me wrong, we'll take a look at the majors in just a second, but this is maybe one of the most interesting ones, I guess. What I like about it, in fact, is the strong momentum to the upside and that this is a retracement. So we can take a look first quickly at the bigger picture. Last month was a very bullish candle. We have a higher low, as you can see right here, indicating a kind of a W pattern, a hook back here, and a potential bounce that has occurred based off this bottom because the bottom has not broken. And of course, that bottom also occurred because of a lot of support here on the left. So pretty sturdy support zone, obviously. Price is responding to that. If you look at my time factor pattern rule, we've had a lot of months not breaking this low. So far, 5 months already. So we're getting into a critical zone area from a time perspective. Plus, last month was bullish. So not surprised to see this month continue. Very interested to see how this month closes compared to the high. If there's a good close, I would expect a follow through of the AUD New Zealand to the upside. If we get a good close, we can consider this trend line broken as well. This is the breakout candle as we speak. So we've had a good bounce and looking at a good break, as you can see. And for this out New Zealand, there is eventually the potential, I think, to move. We've talked about this before, for it to finish this three-wave move, maybe get up to the minus 272 target. But of course, first things first. First, it will probably test this top and this top, which are at, one second, 113-ish and 116-ish, and then 121, and 120 is the psychological round level. Excuse me. So anyhow, that's something to keep an eye on. Let's zoom in quickly. Last week was bearish, but we broke already last week's low, so that, let's say that the bearishness could already, that could be it for the retracement side of it. Let's put a quick target on here. Let's see. Did not reach the minus 61.8 target, so from my perspective, at least that target is still open. Although the 78, yeah, price did break through the minus 272 target, so that should be fine. Daily chart, I don't see any divergence between these tops here and here, so no divergence as yet. This is a pretty significant momentum too, so that looks pretty good. We are all the way at the S1 and back more or less at this trend line, although this trend line has shifted a bit, so let's not use that. All right. Good. So today, for instance, a engulfing twin today, daily engulfing twin, could indicate that this retracement is finished, for instance, right? That could be, for traders that like daily charts, could be, I think, an interesting way to look at it. If we zoom in to the 4-hour chart, for instance, price will probably stop at the pivot point at this previous top. You can see that this is a pretty neat channel being made like this, roughly. That's probably a correction channel. If you look at the oscillator, for instance, you can see that here this oscillator was higher than the previous. So there was divergence in the past on this 4-hour chart. Once again, there's no divergence on the daily chart, but the 4-hour did have it. But keep in mind that price has gone back to the long-term moving average, which I use as the main target for divergence, the 144 EMA close. So that particular divergence has taken care of itself. And basically, price has gone back to a reset moment, and this is a bouncing spot. The 144 EMA is a strong bouncing spot. If you look at, if you just zoom out to see a lot of price action, you can see that if the 144 EMA is showing the long-term trend pretty neatly. I love it as a trend indicator. I love it for long-term indication of the direction, and it works very neat. Typically, when price goes through it, you know, there's a good chance of a follow through. Of course, it doesn't work. There's no magic in the market. Obviously, sometimes it doesn't. You know, when price crossed above it here temporarily, it dove back below it. So of course, sometimes it's a retracement that kind of extends further. That's why I look at fractals and see if there are any fractals that occur around it, and then we get another push. That's typically the secret ingredient that these small pushes above it don't have. All right. So it is a decision zone in any case. This is either going to be more dramatic reversal, or it's a bouncing spot for a trend continuation in most cases. Okay. So from my perspective, considering the momentum to the upside, I think there's a good chance that price will hit the pivot point and the Keltner go sideways like this, make a sturdy daily candle today basically, tomorrow a light retracement, and then there should be a breakout of this flag tomorrow, and that means that today will be a bullish candle, and tomorrow we should see a continuation of that. And on a lower time frame, I would expect price to stop at the pivot point and Keltner go sideways on the hourly chart, excuse me, by doing a bull flag perhaps down to the 38.2 fib max, I would say, put a fib from here to here. Let's say it stops exactly at the pivot point just for the fun of it. You know, let it hit that level, maybe retrace to the 23 or 38.2 fib, and that should be the bouncing spot for a move up to the R1. That's what I'm looking for. Let's take away this fib again. Now another way to trade it could be this 4-hour candle. Just wait for that candle close, The advantage of that is that if price kind of pushes to the pivot point without stopping, or if it stops at the pivot point but makes a shallow retracement and then continues, that the trade is not missed. That's always possible. One advantage, but one of the things I'll be looking for at least is a candle close near the high, as I often refer to, is from my point of view, the price action confirmation signal of a breakout. This 4-hour candle so far has a pretty decent size. We're looking at the high and the low of 30 pips is not a lot, but okay. Look at it this way: 30 pips on the odd New Zealand is not bad. If you look at this size compared to the rest of the candles, you can see you have to look at it relatively speaking always. 30 pips on a pound dollar is a small candle, but odd New Zealand, just looking at it visually, looking back at these candles, nothing wrong with it as we can see. So it seems to be average for that. That's fine. As long as the candle closes near the high, it should be fine. And it's still not closed, this candle, so who knows. From my perspective, the stop loss, the best stop loss would be below this low. It's a bit sizable stop loss because of that. Going close to the 100, I guess, depending on where this, no, a bit less. Getting around the 80 mark, 75 mark-ish. But depending on how and where this candle closes, of course. Another option could be this candle low, which is here. But I would like for me to use that level, the low of the candle, for a stop loss. I need to see typically a larger candle than average, as then I have more confidence that that level will not be broken. Considering the fact that odd New Zealand, 30 would normally not be enough. Apparently on the odd New Zealand, well, let's take a look at obviously the average here is a lot lower with the odd New Zealand. All right, so 24, 25-ish. So yeah, what could be a sizable candle in this case? I think 1.5 times that. So if this candle is somewhere around the 40 pips, I guess that's already a above average size candle. 50 would be great probably for the odd New Zealand at least, right? Then in that case, this particular low of this candle has a higher likelihood of not being broken. I myself, no, I use tops and bottoms. I use candles, fractals, but I know traders that use ATR. And from that point of view, I think it is valuable. So if you do use it, I think it's a great thing, but I don't use it regularly for myself. But I know traders who do, so I think it's a good step. I personally rather take a look at the candle itself and judge, whether the candle itself is strong enough, or do I go back 1 or 2 support levels, let's say. So yeah, that's about it, I guess. On the hourly chart, anyone looking for early reversals might have caught this head and shoulders, inverted head and shoulders, or perhaps 5 to 6 candles not breaking this low, for instance, would be somewhere in here. The breakout candle was this one. That was just a few minutes ago. That was actually when we just started the webinar. But anyhow, it hasn't moved too far from that. 4-hour, I think, is still a bit better than the hourly, to be honest, with this trend line, because one thing I need to add is that this is not an hourly trend line. I don't like trading breakouts like this not on the correct time frame. So I truly think that the best one is a 4-hour candle, because this is a 4-hour trend line. This is not a 1-hour trend line. So I don't think that this is the best breakout candle, considering the fact that the moving average and the Kelvin are close by. So I think that is not a good breakout candle, actually, on the hourly. But on the hourly, it could have been reversal setups here and here. But that's past. That's behind us. But the 4-hour chart would be a good breakout candle, or wait for price to hit the pivot, go sideways, and try to break out. Try to trade the breakout later. Alrighty. Regarding the euro dollar, I think that at this moment, more upside is likely unless price breaks. I would say price breaks below 108.28, 108.25. If it breaks below that, then something else is probably happening. Why is that such an important level? Well, first of all, it's the top that has been broken. So that would be a logical kind of support level, that reverse psychology. That's one thing. Second thing that I like about well, clearly now it's been an uptrend for a while. Since it broke the top, basically, I would expect it still to continue for a bit. And I have a target up in 109.50, 110. All right, so I think there's a good chance that price could make one more push within that that channel. All right, it's been a choppy channel, slow channel, stopping at many of these resistance spots as we've been discussing, but nonetheless it keeps pushing. Right, so I consider the fact that price is in this channel, considering the fact that price is above the main pivot point, weekly pivot point, I think there's a good chance of continuation push. All right, now on the hourly chart, let's take a look. On the hourly chart, we had divergence, but price already went back to the long-term moving average. And on a 4-hour chart, there's only bad divergence, not even proper divergence present as yet. Okay, so with that in mind, therefore, I think putting a fib on the most recent swing high, swing low of the hourly chart. And if anyone is watching this webinar for the first, second, third time, please, by all means, feel free to write a chat, ask me any follow-up questions you might have. Would gladly, dive into some specifics if something is not clear, or if you want to share your chart. As I said last week, sharing is the best way to learn. That way you kind of have to prepare yourself, your chart, make sure it's understandable, present it to us, and we can all take a look together. Right? Great way of learning. So if you want to do that, feel free to do so, to share your screenshot. So from my perspective, it's a 50 fib. There's a trend line here, an R1. As long as price stays above that, I think it's still a bullish territory for a potential bounce to the next target, which is 109.50-ish, and it could extend up to 110. So that's my primary analysis. Let's take a look at the 4-hour chart again. A couple of indecisions candle at the moment. Well, yesterday was quite a big wick, but still bullish, so it's one of those toss-up candles that can't read too much from it, I think. The wick was not big enough to say it's a reversal, but it's not a strength candle either. Let's take a look at the hourly now. Just going flat today, really not doing anything at the moment. Probably the best would be to either, if price gets down to the 50 fib, maybe an hourly candle, I think, is the best. I think we're still looking at an hourly retracement, so keeping an eye on this time frame, I think has the most merit. Looking for a candle that has a big wick, for instance, at the bottom, or that has engulfing twins, which means, for instance, a bearish candle, but then a bullish candle like this. That's one way. The other way would be if price doesn't get to the 50 fib, but rather, has a bullish candle like this poking through it with a candle close near the high. In that case, looking for retracement back at 108.70 and then a bounce continuation like that could be worth it. I think that this breakout, however, is probably better for tomorrow. All right, so tomorrow morning, I mean. So I think the most likely scenarios is that price will get to the 50 fib and then bounce, go sideways like this, and then break to the upside tomorrow. But if it does today make some upside, it'll probably be choppy, and then in that case, I wouldn't be surprised to see actually the correction tomorrow to the 50 fib and then a close in reverse tomorrow. So unless price hits the 50 fib, I think it's better to, I will keep an eye on this tomorrow morning. All right, pound USD is basically not pulling through to post a new higher high as I was looking for. I had this fib on, and here I was looking for a 38.50 bounce. That did happen, both. Actually, price bounced at both, but it didn't have a follow through above this top, failed to break the top, and is now reversing. So it is not the wave 5 or it is a truncated wave 5. I'm not sure yet. I'll do the wave analysis again tomorrow morning, but it didn't go to the target as far as I was hoping for. That's for sure. So what does that mean? Let's take a look at that. Let me take all of this info off. With that failure to post a high, it's probably finally finished the swing high, swing low, which was about time, I guess, considering the fact that it has been pushing up for a substantial period of time. Now about a few hundred pips. Slowly but surely, I guess. At times it was fast. There were a couple of big candles, 3 big candles, but most of these parts were quite choppy, like this and this, and this was still reversal territory. So from this perspective, let's take a look at the hourly chart now. Let me take a look at the daily candle. One, two, three, four, five. 2, 4, 5. Yeah, I really was expecting one more push up, to be honest, to the R2, to the R, because the price broke above the R1. Small push to the R2, and I was looking for a reversal there, like the last final push within that uptrend, get divergence there, but that hasn't happened yet, and we're actually reversing. I am not sure, folks, if this is just a small retracement or a big retracement, but I would, at this moment, go with the big one. All right, so I think it's going to be reversing back. That this break of this low on the hourly chart here, break through these fibs, right when I had this fib on, this fib, the fact that it broke through the 50 here, this one, this bounce basically, right? The fact that it broke through this bottom is really changing the structure, and I think therefore it's not only correcting this swing high, swing low, not only that small bit, but basically the whole bit now, right? The whole piece. So we can take off this fib. I think that at this moment it seems pretty likely. And who knows? It could be a whole reversal. But the reason why I think it's still a retracement is because I think that the larger picture to wave E, and typically you'll have 3 waves in the wave E. This is the first part. This could be the second part. And then we can go up for a third part to finish the last bit or part of that triangle. That's what I'm expecting now from a technical point of view. Bob has a great point. Hi, Bob. Good to hear from you. Is that tomorrow, of course, Article 50 and its potential effect, right? So that's something to be aware of. And from that point of view, it could be good not to trade the pound or to exit it by today, for instance. What the effect could be, I mean, Nanette and I think it's, the whole thing has been, we would analyze that it's been priced in. So I'm not expecting something radical tomorrow as yet. Could Article 50 trigger cause the pound to keep falling towards these fibs and let's say make a fall down to the 61.8 or 78.6 fib? That could be a good trigger for that, right? So I think that this is something that could fit within the story that I see here on the technical. So the fundamental, let's say, development could fit within that technical part, if you see what I mean. So that wouldn't surprise me. But I'm not expecting the downtrend as yet because of the wave V. But let me say it this way. It's always good to keep an eye on, what developments might indicate that might change this perspective for me. What if? It's always good to think about what if. This is my main thought, but if there's a strong daily candle, I'm not now giving a hypothetical situation, yeah? But if this 4-hour candle is in this zone is strongly bearish, then the market is informing me that my analysis might need to change, right? It's always good to think about that. So, excuse me. If price really during the Brexit shows a lot of momentum like this, then it would have to show a lot of bearish momentum for me to consider that this wave V has been finished. And eventually we'll have to break through this bottom. For the moment though, whether this is a wave 3 or this is a 1, 2, 3 correction, bears not looking too bad. Now of course, with a news event like that, excuse me, you can always be aware of the risk involved, and you never know if the article does not get triggered for whatever reason. It could have all kind of effects: pound weakness, pound strength. I would guess pound strength, but you never know with these news events, and who knows? It just turns and continues with the uptrend. That's always a bit. These news events have their own kind of mentality because of that. But for the moment, I think that price could stop. From a technical point of view, though, let's stick to that. 23.6 fib could stop at that level and break tomorrow down to the 38, and then I would say down to the 50. That could be already a decent bouncing spot because of the moving average, the S1. So that seems like the most likely path. Let's see tonight how price responds to the 23.6 fib. I would expect some slowdown there. But it is good to keep an eye on the whole event if when that when that event is taking place, when we can take a look and see what time and etc. Right? I'll get back to that in just a second. Dollar yen, excuse me. Is also showing dollar weakness. 1, 2, 3, 4, 5, 6 candles bearish. So this candle is going to be important in my opinion. This candle being bullish could indicate that this particular correction is over and there could be a bigger ABC zigzag correction. That's what I'm expecting at the moment. What I would expect is price to retrace to the upside like this and probably get up to the 38.25 or 50. Then turn around and make one more lower low. Now, where do we get that lower low? I'm not sure, but it seems most likely at the moment. This is strong momentum. I'm expecting a 3-wave down. Now, this was a strong trend to the downside, and basically one that might get a correction as price has hit 110, and there's substantial time here. There's substantial number of candles that have not broken the low, which means that this particular swing high, swing low could be finished, and we might see a bigger correction. Well, there could be effect for the article, I guess, from some effect. Of course, the pound will have a direct effect because it's impacting Great Britain, therefore, hence the Great British pound. But it should be milder. Ultimately, if the pound dollar is moving up or down, of course, it might have some effect, the opposite effect on the dollar yen, which, let's say, on paper as the opposite direction typically. Yeah, that's possible indeed. Um, if, from this point of view, that there could be a move towards more um, risk adverse, risk off, and therefore to the dollar, which could push the dollar yen up if the article is triggered, for instance. So there could be some of that. I think that the level of movement is not going to be as intense as we've seen with the vote itself, just because, of course, there's plenty of time for the market to adapt to this uh, to this change, to this new development. It's coming. It's around the corner. It's not like a big surprise. So I'm not saying there would be no movement at all. Of course, there'll be some movement, but I just don't think it's going to be as dramatic as what we saw June last year. Uh, but it isn't. It's just it is a news event. It's a news event with a red tag news event. So I think it's going to be on that level, personally. So, but that could, for instance, then indeed fuel the dollar yen upside. But let's see from a technical point of view, this candle being bullish would be important for me. Or if this daily candle has again a wick, for instance, like this, could indicate the bounce at the S1. Anyone else have a particular currency pair in mind? Pound yen, remember we were talking about the fact that it was in a range, and if it breaks out, that it will probably go back into that range. So this is what you can see happen indeed. Boom, boom. With a big range like that, it's very often the case that there will be a hook back. Now this one stayed flat for quite a long time. But considering this momentum and the fact that there has been a three-wave correction like this, I think that now it's looking pretty good for a breakout to the downside. Now, of course, this is again the pound involved here, so that's a bit annoying. But technically speaking, if it gets back to a small retracement here would be neat, maybe to the 50, 38. I think that could be an interesting zone for downside. But this has the pound again in it. Your odd is making a correction too, so if it makes a bear flag, it could be ready for a reversal as well. Gold went all the way up to the 88.6 fib, looking for a correction here like this, but really challenging it quite sturdily. Does not look that much like a turn as yet. There is some wick here. Today's candle could give more information if the price is indeed stopping at the 88.6 in R1. Still holding on to that, but let's see. Today's price action, I think, will reveal a bit about that, whether that will happen. All right, S&P 500 did see a follow through to the minus 61.8 target. Kind of saw a pullback and then follow through, but pretty big daily pin bar already. So that's a pretty substantial pin bar after price more or less finished an ABC zigzag down to the 61.8 target. From my perspective, 6 weeks not breaking this high is really needed to even contemplate about maybe a larger correction. This is week 4, so I think still a lot of time before I would even think about maybe a bigger correction on this. For the moment, strong uptrend, and this could just be simply an ABC zigzag correction. So if anything, it could be in breakout territory close or nearby. I don't trade this, but just analyzing it. Gold was in a bouncing spot indeed, as we said, close to these trend lines, made one more lower low, and seems to be bouncing slash breaking. So a bit of a hook back here maybe could be good, and could be a bounce from there around 47-ish. All right, DAX challenging the top. We talked about this one, that this is a box, break of the box, should see move to the targets, reach the minus 61.8 target, and does not seem to be stopping as yet. I personally don't see anything interesting at the moment. It's too close to this top. Dow Jones looking more or less the same as S&P 500. Let's take a look at the euro yen. Let's see. Abe is asking for the euro yen, and we can do that right now. Regarding the schedule for Brexit, let me see if I can find more info on that. We see that on the Admiral Markets calendar, Article 50 Brexit process starts 10 a.m. it says, which I think is GMT time, so 11 a.m. Or that is UK time, excuse me, I think, not GMT time, that's an hour earlier, 9 a.m. GMT time, 10 a.m. UK, 11 a.m. Central European time. So I'm not, it doesn't say, how the process starts, if that's a press conference from May. Does anyone know about that by any chance? Ah, great. Bob has the details about the process of the event, of the exit, or the start of negotiation process towards the exit, however you want to call it. The cabinet briefing is in the morning, and then the letter is released to Tusk from the European Union Commission, I think it is, if I remember correctly. I'll double check that. Yes, no, Council, sorry. President of the European Council. So that will be the sequence apparently of the actual event, but it should be tomorrow. So let's take a look at the euro yen. And Bob mentioned thinking of long around now, bouncing off fib, but could go down to 133.30. Which one is that? Sorry, is that the one we just looked at? 133.30. Gold, right? But that was dollar cat? Okay. There we go. Dollar cat and euro yen. We're going to take a look at those for sure. Not an easy one. At this moment, I would be inclined to say that price could go down to this minus 272, minus 61.8 target. Look at this bearish candle. So strong. All of these smaller candles pretty much looking like a bear flag. Those fib targets could be sturdy bouncing spots though as price retests those support levels. So, well, today's candle will say a lot. Today's candle, if it's bearish like this, that would probably be after all these small candles, bearish candle, that should probably send this down, I would say. But if it's not bearish today, that could change things too. If this is bullish, for instance, that might alter things. It is above the weekly pivot point. So if it breaks below the weekly pivot point and this trend line, I think there's the potential for a breakout to the downside here. 133.30 is around the S1, which could be a bouncing spot. I agree. Of course, there's always the potential for this. But I myself would maybe be not the biggest fan of that personally. I think that if it breaks, I would be more inclined to look for a deeper retracement personally. It could be a bouncing spot, but I think it could be a mild bouncing spot. I mean, from my perspective at least, like this. Let's see if it breaks first of all. Of course, if it doesn't break, it might build a ascending wedge like this and then break to the upside. Euro yen. Yeah, I haven't given much time to this euro yen. I've not really been a big fan of the euro yen recently. One second, folks. Okay, folks, I'm back. So yeah, not a big fan of the euro yen personally. Just very choppy, but at this moment, if anything, like the pound yen, I would say a bit more bearish. Quite corrective. Ultimately, there's a decent trend, to the downside, like this, lower lows, lower highs. So from this perspective, and it's below the pivot point, below the moving average, I think that the downside makes sense. This could be still a bouncing spot. This is approach number 1. This is approach number 2. So if it makes another bounce like this and fails, I think that this one or the next should break with the euro yen. So that's my opinion on this one. Whether it breaks here, possible, but doesn't have to break as yet. There could be maybe an inverted, or not inverted, head and shoulders like that, for instance. So keeping an eye on the level like this makes sense, I think. Around 120, 120, 25 could be an interesting bouncing spot for this to complete. But keep an eye on, though, that this could be a bear flag, and then price could reach the top of the bear flag too. So that's a bit the risk that it could really hit the pivot point. So I personally, if I would use a stop loss, would definitely go above the pivot point and 120.50. 120.50, unless there's, that's probably the best. Just in case it dashes up to the pivot point and then turns. But either spot could be a turning spot, and then a retest at the bottom of that channel, and then I would expect a break. All right, now I don't think this break will go very far because I think the dollar yen could be in a bigger bouncing spot soon. Looking at the dollar yen, personally, I'm inclined to an ABC zigzag to the downside, which means up, down, one more lower low, but then I would think it's a high risk territory of a bounce. Actually, I would change this fib, excuse me, from here to here at 109.40. So that could happen with the Euro Yen too. Euro Yen could make one more low low, but then bounce again. So the S1 would really be it, I think. That could be a strong bouncing spot zone. Let's put a fib from here to here. There's a 78.6 fib. So there is some breakout territory, but quickly running into support at 119.20, 119-ish. That could be a significant bouncing spot also for the Euro Yen, not only the dollar yen. Now, will that be a massive reversal spot or just a minor bouncing spot? That remains to be seen. I think it could actually be a decent bouncing spot, really, considering the dollar yen. But if the dollar yen, by the way, breaks, stops at 109, 109.40, makes a bounce, but that's it, it starts to fall again, then that's the end of any bullish analysis on the dollar yen or yen in general. Then I'm not expecting that dollar yen to move to the upside as much. 50 fib is the last stand. So expecting bounce on dollar yen 50 fib, expecting bounce on euro yen 78.6 fib. But if price does break through the 50, then that's off the table. If it stays above it, then this could be a decent rally here, I would say. So from my perspective, breakout, bearish breakout, bullish bounce. Alrighty, folks. Next week, or this week, of course, more webinars. I'm not even sure if today's webinar was visible on today's IMO Markets website. I hope it was. When I looked just a few minutes ago, it wasn't there somehow. But you registered, so you must have found it somewhere. I'm not sure why it's not visible. Oh, here it is. It is visible for April 4 somehow. No, that's intraday. I'm a bit confused why I don't see it. How did you register for today? Did you see it on the website? Quick question. It was on the website. Okay. Well, then I don't know. Maybe what happened was that the timing was maybe changed so that it's an hour behind here. So maybe it was already removed somehow, or I'm not sure. Yeah, Brian says indeed that the time was maybe, yeah, I think that's what happened. Okay, cool. Goody good. So, yeah, indeed, great job, Abe. Slowly but surely, absolutely. Great that you see the same. And if not, also good, of course. I encourage contrary views. Always good to discuss those as well. But anyhow, more webinars, back to the topic, more webinars with Nenet tomorrow, but also with me 15 minutes later after Nenet, we take a look. I'm going to take a look 2 more times actually at the balance and breakout trades we're talking about last few weeks. And I thought that this week was the last one, but we got next week one more actually. And Thursday we're taking a look at handling and trading news events and then the usual schedule again next week. All right, folks. So great trading, everyone, and talk to you soon. Cheers.